2025 could be the year of some truly insane crypto profits, but only if you know when to sell. Yes. But here's the truth. You probably won't nail the exact market top, so disabuse yourself of that notion. And honestly, you shouldn't wait to find out if it's going to happen or not for you because it's just far too risky. You're probably not going to time the top. So what you can do is to bookmark a bunch of common indicators to refer back to know when you should start exiting the market before the next crash wipes out all of your gain. Try to get enough, not everything possible, because that's probably going to be a bad decision for you. When you see a lot of these different indicators flashing together, that's your cue that enough is here and it's probably time to start getting the heck out of the market. So in this video, I want to share the exact tools that you'll need to avoid being stuck holding the bags all the way down to the bottom of the next bear market and losing all your damn money again. Let's start with on-chain indicators. First up is the MVRVZ score indicator. Now this measures whether Bitcoin is undervalued or overvalued by identifying when the market value is too high for its realized value. The market value being the market cap, the price per coin multiplied by the circulating supply, and the realized value is calculated as an average of Bitcoin's price at the time each one was last moved. Okay? So when the Z score, the orange line, enters into the pink box, this is your signal to start taking some profits. And yeah, I know you don't have to sell your Bitcoin, but Bitcoin generally leads the way. And if Bitcoin's doing this, then your altcoins are probably going to top pretty soon. Okay? So if this goes above the pink box, that is the cue to pack your bags and probably consider getting the heck out of the market sooner than later. Okay? Things that will end a lot faster than you think they will. So far, this indicator has been able to identify Bitcoin's peak within about 2 weeks of the top, which is close enough. And as a bonus, it also works for finding market bottoms. Just look for the Z score entering the green box. Save that one for later. Next, there's the net unrealized profit loss indicator known as the NUPL. Unlike the MVRVZ score, this indicator looks at the unrealized profits and losses by subtracting realized value from market value. When Bitcoin's market cap grows much faster than investors are taking profits, it's a sign that the market is overheating. The key here is the blue line, and when it enters into the pink box, Bitcoin is close to a cycle top. Finally, there's the reversal trend between the long-term and short-term Bitcoin holders. As Bitcoin's price comes into its peak, you will see a rise in short-term holders buying and a rise in long-term holders selling. This is the crypto newbies FOMOing in at the top because they just heard about Bitcoin on the Jimmy Fallon show, or they saw some mouth-watering price and panicked and bought. Whereas long-term holders, people who bought low, smart money, right? These are the addresses that have held Bitcoin for 155 days or more, so they bought during the bear market, during the accumulation periods. So if you've been in the market long enough to be in the green, you'll know, well, it's time to take some damn profits, isn't it? Call it a day. Market cycle's over. Now, before I talk about the technical indicators, that was the on-chain stuff. When we're talking about technical indicators, I want to take a quick second to let you know about today's sponsor, and that's CoinStats. This is a fantastic tool that you can use to save your time and to manage your entire crypto portfolio all from one spot. CoinStats is an awesome product because it connects to pretty much any cryptocurrency exchange or wallet out there and tracks all of your transaction history so that you can keep track of your portfolio the easy way. With CoinStats, you can get best-in-class profit and loss analysis with portfolio analytics. Look, it's essential to know your profits during the bull run, obviously. Know your total cost, the amount spent on acquiring the assets, your unrealized profit and loss, the profit or loss on the assets they haven't even sold yet, realized profit and loss, how much money you've actually made or lost. You can check your detailed asset profit and loss transactions all in CoinStats. With Wallet Explorer, you can actually search wallets across 120 different blockchains and see detailed analytics. And if you want to follow any wallet as well, and this is some real alpha here, you can just add it to your watch list. You got a whale who's been nailing all the meme coin calls? add them to your watch list. You can even turn on notifications for those wallets to track them once they buy or sell a new position, which can really help you stay ahead of the game by following the smart money. And if you don't want to connect, you can also do everything manually, okay? It has heaps of cool features like portfolio analytics, historical graphs, which means, of course, it does all of the heavy lifting for you. Now look, recently I've noticed they're also bringing in some really cool AI features, which are going to take CoinStats to the next level again. And if you're someone like me who uses multiple wallets, so many exchange accounts, then it's an easy decision to use a tool like CoinStats. It's super useful. Additionally, CoinStats has an easy-to-use mobile app because we're all on the go. We can manage portfolio right here. Keep up to date with those notifications for the whales and stuff like that. It's got a great user interface. You can check all your balances just at a glance. And here's the kicker. CoinStats is giving the Lark Davis community, that's you watching the video, a 50% discount by using my link down below in the description. That's an awesome deal. Go check it out and support our sponsors. Now, let's talk about the technical chart indicators. First up, the Pi Cycle Top Indicator. And this indicator looks at two moving averages, the 111-day moving average and the 350-day moving average. When Bitcoin's 111 DMA rises above the 350 DMA X2, by the way, this indicates that the market is at unsustainable levels and is topping out. And here's the crazy part for you, okay? In the last two cycles, this indicator flashed within just 3 days of Bitcoin's top. 3 days. That's crazy. So to say it's hard to time the exact top of the market, well, when using an indicator like this, with this incredible accuracy, you would have gotten pretty darn close, okay? Again, you don't need to perfectly be the one guy who sells the top. If you get this close, you're doing okay. Do not forget about this indicator in 2025. But do keep in mind that altcoins usually peak a few weeks after Bitcoin. So don't rush necessarily to sell your entire portfolio when this flashes, but plan to start exiting your altcoin bags within the next 2 weeks. Next up is the weekly MACD, a momentum indicator that sounds the alarm when the market trend changes. So you need to be looking out for a bear cross, which comes a bit late, but still is a kind of the last call to exit the market, okay? This is when the price of Bitcoin falls below the MACD line. So this is confirmation that the bullish uptrend is ending and a bearish downtrend is beginning. So if you sold when the weekly MACD bear cross happened in 2021, you would have gotten a lot of your profits out safely. Bitcoin was around $52,000 at the time, so yeah, you didn't perfectly sell the top, but you probably got out good enough. You also had another chance to sell when a bear cross happened again at $50,000 in late 21, early 22, before the big drop down to $16,000. So yeah, it's like, again, not the perfect top, but close enough. Now let's talk about the RSI, which is the Relative Strength Index. It measures the magnitude of recent price changes that investors can gauge whether an asset is overbought or oversold. A high score is over 70, and this is considered to be overbought. And if we look at previous cycles, they've all peaked with an RSI over 90 on the monthly. So that's the key level to look out for. Monthly time frame, RSI 90 or more, market's cooked, baby. Time to get out. Another indicator to keep in your back pocket is the 21-week EMA, the exponential moving average. It's an average that puts more emphasis on recent price action rather than price from many weeks and months ago. So it reacts quicker to changes in momentum in the market and can help you identify when a trend reversal is coming. Obviously, we're all excited about uptrend reversals, but the trend will at some point reverse down and need to get out when that happens, which means when Bitcoin's price falls below this line and fails to get back up above it, this is likely signaling the end of the bull market, or at the very least, a major local top. The next one is an interesting take on the Fibonacci retracement lines called the Fibonacci halvings. Now, this analysis is coming from CryptoCon. Give them a follow over on X. And this shows that if you draw the Fibonacci retracements from the Bitcoin halvings, it nails the cycle top for the past 2 cycles. And when you apply that to the current cycle, the red 0.236 line indicates the first top is due in March 2025. The orange 0.382 line indicates that the final top is due in October 2025. Using these Fibonacci levels, the next cycle can also be mapped out. And if these hold up, it also predicts the next bear market bottom will happen in September 2026. Are you going to be buying then? Yeah, this is shown, by the way, thanks to the 0.618 line. And the first early top will come in for the next cycle in May 2027 before the next halving in March 2028. So you want to keep an eye out on this one. Be curious to see how that plays out over the next few years. But this next indicator may just be the most accurate of them all for identifying a true cycle top. Well, that's according again to CryptoCon. This is the Bitcoin RSI Bollinger Band percentage phases. So we're able to see right through the BS of the April double tops in 2013 and 2021 to call only the final top, something almost no indicator has been able to do. With Bitcoin's Trump rally to 100K plus, it means that phase 4 is complete and has just one more cross left to go, which is phase 5, the cycle top. And don't forget that there are also top signals out there in the world that sit outside of the trading charts and the on-chain stuff, right? This is the more sentiment-driven stuff because markets are driven by fear and greed and people involved in the market. Maybe this becomes less relevant over time as AI takes over, but for now, this is still very much true. The easiest and most obvious indicator to look at is the crypto market fear and greed index. When it hits extreme greed with a score of over 90, you know the top is at least getting close for a local top. Okay, fear and greed is not a perfect indicator, but certainly can help you know when markets are way overheated. The market, though, can stay at extreme greed levels for quite a while, so maybe think of it more like an early warning sign to start preparing your brain to switch from buying to selling. And outside of that, keep an eye on stuff like monthly VC raises, because the top can only come when every last dollar has been thrown into the market, essentially. A lot of investors, of course, were caught out last cycle expecting Bitcoin to have this blow off top like the 2017 cycle before it, and we're gonna rally up to $100,000. This guy right here believed that damn story. Anyway, but not every indicator is about price candles, by the way. DeFi Llama shows that VC money skyrocketed to insane levels in November 2021, $7 billion, doubling from the previous month's all-time high. So, you know, these are things to keep in mind. Massive money flowing into the market, huge predictions coming out, all this kind of stuff, all right? This shows that there was still a ton of excess money on the sidelines during that time that FOMO'd in at the last minute. And contrary to what you might think, a lot of VC money is just normie money, right? Someone who's a normie who figured out how to raise a lot of capital on the hype of crypto. Not smart money that can time the bottom. That's why most raises happen at the top, not at the bottom. It's true. But the worst thing you can do is, of course, to marry yourself to any one particular indicator, date or quarter or whatever, when you think the market's going to top. Historically, markets top in Q4 and the year after the Bitcoin halving, so November 21, December 2017. Late 2013, you get the idea. But now the market is more sophisticated, right? The sentiment can change quicker as more investors try to front run the 4-year cycle theory, or maybe not that many people actually paying this attention to these kind of videos and they're just all gonna FOMO on the damn top again and don't think about this kind of crap. March 2024 has been the first time Bitcoin's price has proven the cycle may be evolving to some extent, or maybe it was just Bitcoin ETF hype. The alternate cycle theory suggests that an April 2025 top could now be a possibility. We've discussed that here at length on the channel, with the price action essentially accelerating. And it's been leaving clues, according again to CryptoCon. First, there was the April technical top in 21, the June technical bottom in 22, then the first early technical top in 23. The second early top should have taken place around July 2024, but instead it came a little bit earlier in March, marking the first alternate theory confirmation. We shall see how this cycle plays out, of course, in 2025. Nobody really has a crystal ball, but hopefully that some of these indicators will help you be prepared whatever ends up happening. So regardless of all these indicators, just keep it simple. Your simple strategy is to sell sometime in 2025 before the next bear market comes, probably in 2026. And there's always a chance that that may not happen. We don't have a crystal ball, but make sure that you have an exit plan in mind, okay? You want to exit the market in stages to avoid missing the top, ladder out, all that kind of stuff. And when you see these kind of indicators showing the market being pretty cooked, you might want to consider taking a lot more money out. Okay, because the biggest mistake that most people make is not selling anything. And most investors boil down into one of three categories. They bought low during the accumulation phase, and they actually had the balls to sell high. Okay, they bought high because they came in late, which is going to be a lot of you guys listening to this video, unfortunately, but that's the way it is. Keep learning about crypto, stick around for the next cycle, you're going to do well. But you buy high and then you sell low. It's rough, it's brutal. Someone's got to be exit liquidity. It's going to be a lot of people coming into the market in 2025, unfortunately. And there's a third category of person, and maybe you're finding the right coins right now. Maybe you've been in the market for a year or two. You got it, some really good entries. You bought low. You watch it go high. You don't sell anything because the greed takes over. You ignore all the indicators flashing in your face and it goes back to zero. Don't be that guy. Of all the people, don't be that guy. Don't be the buy high, sell low guy either, but don't be the round tripper, man. Don't be the round tripper. Be the first guy, okay? The buy high, buy low, sell high. That's how you win. Thanks for watching. I'll see you guys back in the next one. Peace.